Alright, this is the third time I've made this video trying to explain your trade, but the video just ends up being way too long. So we're going to go over it, what the good is, what the bad is. Try keep it under 5 minutes for you so you don't get bored out of your mind. Okay, let's come here, select bar, we'll come back here. Okay, we form, I actually think it was off one of these candles here, we form an SMT where ES swept London lows NQ didn't, so you start looking for longs on NQ. Good, we've got an SMT. That's always a very helpful confluence that I definitely use. Not saying I have to use it, but it's always good. As you can see, price from market open, which I think was about here, fell down. I think it was about 100 points we dropped to the bottom. Eventually started building our way back up there, and then we started ranging. Oh, sorry. This is one thing I would possibly say something to look out for is sometimes what tends to happen is we'll have a big move, we'll range for a bit, and then we'll eventually have another big move. Then we'll range for a bit, and then we'll eventually have another big move, if that makes sense. Like, it needs to range before we can have either accumulation or distribution, I think are the two words that, I guess, fancy words anyway. So when this range trade is here, obviously we don't have it yet because it hasn't trade formed. So let's stop yapping and fast forward this a little bit. Boom, candle comes down, creates our fair value gap anyway. We see I'm not gonna lie, it's a very good fair value gap. I like the size of it for taking a trade off. I know this sounds stupid, but size matters when it comes to this. Like you're not gonna take a trade, you know, if it's a fair value gap that skinny. You know, very unlikely I would take a trade off a fair value gap that small. Price eventually comes up as we see here. Now, if this had inversed this fair value gap on this 10-12 candle, that would have been a very nice close and a very nice trade. I would have taken that. It would have been a very, very nice trade of it inverse on that one. Sadly, it didn't, because price ended up not. So on this one here, yeah, it didn't push up too much higher and closed here, which gave definitely not a bad entry. You know, it's not like way up here where, you know, you're right on top of where you put your break even already. So you enter the trade, break even, you got your stop. I don't know where your stop loss is. It doesn't really matter because you went break even anyway. Break even coming off of this 940 candle, and then I imagine your take profit would have been at all-time highs, which at the time was that candle up here. Okay, so first things first, break even. I think I already talked to you about this. Personally, I would have had it up here on this candle here. Just it's a stronger draw of liquidity, and it's more likely to, you know, it's unlikely once price reaches that liquidity level, it's gonna just tank way back down. You know, it's likely to continue going up. So I would have liked to have seen it come up to this price, but honestly, it worked out for you that it didn't. That your break even was down here, even though I personally wouldn't have put it there and it would have been stopped out. Well, sorry. Fuck, I messed this up. So your break even was down here. I would have put mine up here. That makes sense. So it's just on the stronger draw of liquidity. Only other thing I do see about this trade is this other 2-minute fair value gap here. What some people like to do is put their break even on the top of these fair value gaps. So you're like, once price eventually inverses this fair value gap, that's when they would have eventually gone break even. Some people also like to go break even before it hits the bottom of this fair value gap, just in case we reject off of it. Oh, God. So yeah, that's what I'm looking at going into this trade. Hope that's not too confusing. In the trade now, price, I'm pretty sure barcodes for a couple minutes. Yeah, we do see price kind of like in this range where it's not really wanting to break up or break down. However, we have now hit your break even, which this candle does show momentum. It shows that price is wanting to go up, which is a good thing. What happens on the next candle? We instantly reverse off that, and we actually bounce off this fair value gap, which is another good sign, actually, or this inverse fair value gap. We respect it, which we've done on most of these. You know, it's not like prices come way down easily through it. Next candle, however, boom, comes down and break. Actually, you know, you would have been break even on that candle there. Sorry, my bad. So, I mean, there's not really a whole lot to say about this trade. It's more just understanding the market conditions at the time. So obviously we have accumulation, which is all of this. Then at some point, imagine we would probably have some sort of like higher distribution, if you know what I mean. It's like that. So like this drop we had here on market open, here's your accumulation distribution. Had a little bit of accumulation here, distribution. So you see how it kind of like has to consolidate before it eventually does like some form of big move. I don't know, it's just how it works. But yeah, it's not a bad trade, just that break even is the main thing I would work on there. So that's how I would have it. Obviously, I would have been stopped out on this trade. But yeah, just for future reference. Also, like I said, just be careful with trading on Mondays, I think I said, as they do tend to be a little bit weird with the price action. But yeah, that's about it. Hope that helped.